Hello everybody, welcome to the second chapter of the complete course on trading. Well, the Boolean Capital has come up with a really nice course and I hope you are enjoying and understanding what has been taught till now. Well, not much, but yes, we did understand about trading view for pro traders in our last video. Let's understand about market structure. Today, our agenda for this chapter is to understand what exactly market structure is, what is a trend, we will see different types of trend, we will see basic glossary that we use when we talk about market structure, and we will also see how the different trends look in a real market. Apart from that, we will also understand about bullish reversal, bearish reversal, and we will see that as well in the market. So let's move and understand each of these concepts. Okay, so now let us begin by understanding what exactly is a trend. Well, this definition here is what Google tells. But don't worry, because these definitions are only for you to understand what is a trend, because we don't actually define a market trend, right? So let me explain and help you understand. So it says a market trend is a perceived tendency of financial markets. Let us understand by these words here. So what exactly is a perceived tendency of financial markets? Right, so perceived tendency, as you know, we have the stock market, and the market itself is the reason it is called as a perceived tendency is because we need to know how the market moves, right? And this is a financial market. There are various kinds of market, but specifically when we talk about stock market, and in this course what we'll be talking about the market trend, that will be with respect to the financial market. So as it says, it's a perceived tendency of financial markets to move in a particular direction. I want to draw your attention on this. All your markets move in a particular direction. So if you see over a period of time, a decade to 20 years, 30 years, they are long term, you can say. These are called long term directions, and they move in a certain particular direction, right? So they say these trends are classified as secular. So secular, as you can see, it's a collection of multiple primary markets. Okay, I will help you understand what exactly is a primary market, secondary market, and why it's called secular. So secular, if you can see, basically refers to a decade or more, say 20, 30 years, over a range of years, right? So if you consider time, then secular markets basically how a market is moving, in a particular direction, right? So we call this secular. And if you consider each of this, say for example, this is 1980s, 19 give me a minute. Okay, 1990s, 2000. All right, so these are in terms of in bursts of 10 years, right? So if you consider 1980 to 1990, this market, it was like an uptrend. So these are called primary markets. Let's understand that. So as I said, a secular market for long time frames, that is decades. Primary market for medium time frames. Now primary, as you can see, it's called bullish and bearish market. We'll understand what a bullish and a bearish market is, but please understand your primary specifies how a market is moving within medium time frame, say 5 years or 7 years. It can also be like 3 years to 5, 7, whatever it is, right? Within the 10-year time frame, it can be your medium intervals of time, right? And then we have secondary for short time frames, very little. It can be even for a day, 2 weeks, months, something like that, right? So I hope you've understood. You do not have to remember the definition, but all in all, I wanted to tell that a market trend is a method or a type in which a market moves in a particular direction, if it is upward or downwards or either sideways. Now I will tell what these are called specifically as and when we move ahead. So I hope this was clear to you. Let's move on. Now We have to understand different types of trends. I will tell you different types of trend and how to identify these trends, right? So if you can see, there is a common way of identifying trends, and that's called a trend line. If you remember, in my last lecture, I had showed you how to draw a trend line in TradingView, and that was Alter plus T, right? So you can draw a trend line. Now I had told a trend line is basically a line that is used to identify which way the market is going, if it is going on uptrend, upwards or downwards, sideways, various kinds. So as you can see, trend lines is nothing but it helps to connect a series of downtrends and uptrends together. Don't worry if you are not getting, I will help you understand that. But please understand the glossary and the basic terminologies. Now we know about the trend lines. Let's understand what exactly an uptrend is. Alright, so an uptrend is basically a trend or a pattern, a movement which connects a series of higher lows, creating a support level for future price movements. Now let's understand this. You can call any moving market or any market that is moving upwards as uptrends, right? Because it is going up, as you can say from the word itself. Now we will understand what is higher lows, higher highs, lower highs, and all those terminologies when we move ahead. But this is also called as bullish market. Please understand. An uptrend is also referred to as bullish market. Okay, why? If you know bull, if you see a bull, how does it attack? How does it attack the enemy? It kind of lifts it with the horns, and that's why it's called as bullish market. It moves up. This basically tells, this bullish market basically tells that there are more number of buyers than sellers, right? What it means is, if I have to, say for example a stock, right? Last time we had taken example of TCS, right? So TCS, there are certain number of stocks, and there are more number of people who want to buy the stock of TCS. So when that happens, automatically the market will go in uptrend or the upward movement or the bullish market, you can call. Now this basically will be like a support level. Now I will help you understand what support and resistance and all those things are. But please understand, support level is basically a place wherein it's like a strong line, you can see a strong level that uptrend creates or the bullish market creates, wherein it will support the future movement of this stock. I repeat, a support level is a level wherein it will support or it will hold, it will prevent the stock from moving down, and this will act like a backbone, a support for the market to move next. I hope it was clear. I will help you understand it more clearly. Let's check it out. Okay, so yeah, let me take this. So here, if you can see, this is uptrend. How is the market going? It is moving up. I'm sorry. Yes. So as I was saying, here the market is moving up, right? Do not worry about these. This is a candle stick type of chart that I had told you, and I will help you understand what exactly is higher, low, and all those things. But please understand here, you can say uptrends create a support, right? A support in the sense a level which it creates, either this or this, when it moves up, right? After this it's moving. So even if it has to fall, even this, say for example, right? If it has to fall, it will prevent it from going back. Okay, the main reason, or for better understanding, let me take the sideways trend here, right? So if you can see, after this, or yes, after this it has moved up. Can you see the market has gone up? This is a slight uptrend. Okay, but can you see when it comes down? Can you see this downtrend? This support, it will bounce back. So this is the base. It will stop the market from falling beyond it, and the price will get retained or either move up. Okay, so I hope you have understood what a support is. Now let's take an example or understand what a downtrend is. So downtrend connects a series of lower highs, creating a resistance level for future price movements. So as we saw in support, downtrend is also called as bearish market. Bearish market. So in bearish market, what happens is that the stock or the market comes down, it falls, right? And the reason it falls is because the number of sellers are greater than number of buyers. Okay, when you have more number of people selling and less number of people buying, that is called a bearish market, and then the price falls eventually. Okay, so this is also called as bearish market, as I've said. Now let's understand what a resistance level is. Resistance level is a level in which when a market moves, it will not cross a particular level, because this is like a hindrance. This will hinder your market from moving up. Let's see in our example. Okay, so let me move to the, yeah, we have this. Okay, so this one is your resistance. What exactly is happening here? Can you see? Even if the market is moving up, it cannot break through. It is not moving more further up. What is happening is coming down. The reason is because this acts as a resistance, right? This is hindering your market from moving further up, and it is coming down. So this, you can see, is clearly a small downtrend. If I take this particular area for example, right, and it's coming down, whereas this was support, this is your resistance. This will, prevent your market from going down further, and your resistance will prevent the market from going up further. I hope your support and resistance was clear, and so was the uptrend and downtrend. And as you can see here, can you see this is downtrend? It is moving down. How is the market? It is falling. Can you see? Where in an uptrend it was going up, in downtrend it is coming down. So let's understand about the sideways trend now, right? So sideways trend is also called as consolidation zone. Now the reason it is called a consolidation zone is because before the prices change, for future price movement, whatever the prices change, there will be an area, it will like be consolidated, it will move in a particular direction, horizontal way, right? And that's why, can you see, horizontal price movement that occurs when both the forces of supply and demand are equal. That is, when number of buyers almost, not exactly equal, but almost is equal to the number of sellers, then we say it is a sideways trend. Now you can see good amount of support and resistance, and even in my example I showed you clearly here, right? And what exactly happens is the market moves back and forth between these levels, between the support and resistance level, right? So let's take a look at that. Okay, so here I have this sideways trend or the consolidation. Can you see this is the resistance and this is the support? This is support and resistance, and the market is moving back and forth. Can you see, it's like a wave, and both almost equal. The buyers and sellers will be almost equal. So I hope you have understood what an uptrend is, what a downtrend is, and what a sideways trend is. All right, so now let's understand the different glossaries that we have. All right, so let's take a look at a few words that we usually come across. Now I want to tell you with respect to uptrend, and then I will go with respect to downtrend. So let's understand. First is low. Consider that in an uptrend my market goes, I'm sorry, so consider my market goes like this, and then it will go like this, something like this. Okay, so this point here is the low. Okay, next comes, so now this is the lowest point, that's why it's called low, obviously, right? Next we have high. So this point here is the high. Next we have higher low. As the word itself says, higher low means this point here. Now next is higher low. So we will see this is the higher low. Why? Because it's a low, definitely. It's lower than your high, but it is a higher low. It is not lower than this low. I will tell you, those terms will come here in downtrend and I'll help you understand. Next is higher high. This is higher high. Okay. Now why is this higher high? Because this point here is higher than the previous high. So that's why it is called as higher high. I'll again summarize. This is the lowest one. We will call it a low. All these 4 points that you see will occur in an uptrend. Then this is the high. Coming to this point is higher low, and this point here is the higher high. So I hope you have understood these terminologies. Okay, let's move on to downtrend and what terminologies we can see there. I will show you all these points on the real-time graph also and the example that we have. Next, first in downtrend will be high. Okay, this is the highest point. As I'm saying, it occurs in a downtrend. Okay, so consider something like this, right? Now I'm just drawing it roughly. So this is high, this point is low, current low, because you do not know about these points here. This will not be formed until, so you can say that in a downtrend this will be low, right? And then say for example, okay, so now we have low, that is this point, and lower high, this is lower high. Okay, why? Because this point is obviously higher than the low that was recorded, so that's why it's called lower high. And next, lastly, we have lower low. Lower low because it is a lower point than the previous low that was seen, so that's why it's called lower low. I hope you have got these terminologies. We'll be using quite a lot of these. Please make sure that you're familiar with these terms, and you know about these points. Okay, so let's see exactly how it looks in the graph that we have. I'm sorry, the chart that we have. Alright, so now that you can see the chart here, let's understand in the uptrend what we have. Okay, so first we have low, so consider this point low. Can you see this is the lowest point, so we will consider this as low, right? Next we have high, so you can consider this point to be high. Obviously this is higher than this point here, right? So we name it as high. So can you see it is an uptrend and we have high. Consider this point here, right? This point here is the higher low. Okay, can you see it is definitely low, but it is a little higher than the previous low that was seen. And then we have the higher high, because this point here is higher than the previous high that we saw. I hope you understood in how we can see in the market. Let's come back to downtrend, and if you can see, this is the downtrend. This point here is the high. Okay, can you see this is in a downtrend? I'm just considering this factor here. Now if I have to say this particular point is the low. Okay, this is high, this is low. Next what we have is lower high. Can we take this point, right? We will just pick this point. This is lower high. Why? Because this point is little lower than the previous high that we saw. And next we have this one, that is lower low. Means this point here is definitely lower than what we saw earlier. Can you see this difference here? So I would say, consider like this. So this difference, so it is definitely lower than the previous low that we saw. Okay, I hope you got a clear understanding of these different types of glossaries. Next, see what we have. Now we have to decide how to exactly find a trend reversal, right? So trend reversal is nothing but a movement of the market in which, say for example, you have an uptrend going and then that uptrend comes down. Suppose there's some news in the market or there are more sellers than the buyers, then we have the downtrend. So this, can you see, it was an uptrend, there was an uptrend going, but suddenly because of something it turned into downtrend. So this is a trend reversal. This you will call downtrend, right? So let's understand. We have two types of reversal. One is bullish reversal and another one is bearish reversal. So what exactly comes in a bullish reversal? Let's take a look at it. So here, a bullish reversal is seen in an uptrend, obviously. So when you have the markets going up, this bullish reversal occurs in an uptrend. Okay, when does it occur? When there is a lower high formed and then concurrently there is a lower low formed. Meaning to say, we have a lower high formed here. Okay, consider this low, and then here, and then we have a lower low. Okay, meaning to say, see, this is the highest point, right? So can you see, this is low, but we won't get to know until this lower high is formed. Why? Because when do you say it's in a downtrend? When do you say a market is in downtrend? When it is moving down. Now your market can be a bullish market and have green and red candles. However, you need to know that you will not be able to know until you have a lower high, and next concurrently you have a lower low. Okay, I hope you understand. So it was an uptrend, and then there is a trend reversal, bullish reversal, and you see a downtrend going. So now you have a downtrend, and this is called as bullish reversal. Please note that in such a scenario, the price of the stock is said to have fallen down. If you have heard people say, if they have purchased a particular stock and it has gone down, the price has fallen, the market has fallen. So all these are examples of bullish reversal. There was an uptrend and suddenly the prices went down. There will be losses and also profit for a few. We will see how and when in the upcoming lectures. So hope you understood about bullish reversal. Now let's understand about bearish reversal, right? Bearish reversal is seen in a downtrend. I am sorry, this is not uptrend, this is downtrend. Okay, let me make this correction. Okay, so when does a bearish reversal happen? Let's see. So consider your market is falling down, your prices are going down. Okay, and then what exactly happens is, this will be your obviously this will be your low, say for example, and then when there is a higher low formed and concurrently there is a higher high formed. So say for example it goes like this, comes like this, and then goes like this. Okay, so can you see here what happens is, there is a, so we will say that this is a high formed here, right? Because as I said, just like in bullish or an uptrend, we see that your downtrend can have both green and red candles, but the market will be seen falling, right? And then say for example you have this point which occurs, and this is the higher low. All right, so higher low I have, and here we have higher high. Okay, so in case this kind of a pattern is seen wherein you have higher low, the obviously the higher low has not crossed the lower point or beyond that, and it has moved up and formed a new higher high, you can say it is a bearish reversal. Please note that again in such a situation, and this is with respect to both bullish and bearish reversal, that it can see a sideways trend for some time and then show either an uptrend or a downtrend. I hope this was clear, right? Please note that if you have seen people, happy people who have come and told you that there has been, the price of the stock has increased, they have seen profits and all. Usually in a bearish reversal, the price of the stock is said to have I'm sorry, not fallen down, it has gone up or moved up. There is a positive. Why? Because the price of the stock was, say for example 50 rupees, and now because of the bearish reversal it has come to 70 rupees or so, something like that. I'm just taking an example. Can you see the difference? 20 rupees profit for people, right? So they say there can be both losses and profits. Now that depends on how you analyze markets and a little more in depth, which I will definitely cover in our upcoming lectures. So this was all about all the different types of market structures and trends. We also saw at glossaries and basic terminologies, and we also saw what a bullish and a bearish reversal was. That's it for today's lecture. Please make sure that you understand this in your market. You can visit tradingview.com and then try to see what are the different types of patterns, uptrend, downtrend, and then you can also see where is a bearish reversal happening, where is a bullish reversal happening, what is a sideways trend. So you will get a clear picture of it, right? Moving forth, we will jump into a little depth of it, and we will totally understand what exactly and how you can analyze certain situation. Next in line we have is advanced candles, and you will know how to find and rectify or understand what kind of a candle is formed, right? So stay tuned, and I will see you in the upcoming lecture. Till then, goodbye.